Hi, my name is Mike Hetman, and welcome to another edition of CMS Forex News. Today is Wednesday, December 12th, 2007. Yesterday's Fed announcement caused a sharp drop in carry trade positions, boosting the yen and Swiss franc. Today brought a wind of reversal, as 5 central banks led by the Federal Reserve announced a coordinated effort to ease the credit squeeze by injecting cash into the credit markets. The pound-yen pair touched a low near 225 post-Fed announcement. It has since gained 500 pips and returned to pre-announcement levels. The move to encourage short-term lending among financial institutions through injections of money supply boosted investor confidence about the global economy and increased risk appetite for higher-yielding assets. The dollar-yen pair saw strong buying today as it jumped above its high from yesterday and traded 170 pips higher than its open near 110.60. Investors use the yen as a funding currency in carry trade because of its low interest rate. The Swiss franc also felt the pressure since it is also used as a funding currency in carry trade. The pound-franc pair rose 275 pips from its session open until noon in New York. The franc, which has an interest rate of 2.75%, fell against the euro and dollar today as well. Turning to some fundamental news, we saw that a measure of inflation faced by companies in November rose 2.3% year over year and 0.2% on the month. The results were higher than expected. The seasonally adjusted current account in Japan showed a larger than expected surplus of 2.56 trillion yen. In the UK, claims for jobless benefits dropped 11,100 in November, double what economists had predicted. Companies continue adding more workers as the fourth quarter is expected to be strong before a downturn in 2008. The claimant count unemployment rate for October stood at 2.5%, the lowest in 32 years. Earnings of UK employees increased 4%, which is less than forecasted. The data shows that wage inflation has not picked up, even in a tight labor market. The ILO unemployment rate notched down to 5.3% as the labor market in the UK continues to support expanded job growth. Industrial production in the Eurozone for October recovered to show positive growth. On the month, output increased 0.4% after a 0.8% fall in September. For the year, production is up 3.8%. In Canada, both exports and imports declined in October. Imports fell by a larger amount, causing the country's trade surplus to widen to 3.3 billion Canadian dollars. The trade surplus with the U.S., however, narrowed to the lowest level since October of last year. The U.S. trade deficit in October increased to $57.8 billion as the higher oil price increased the value of imports, which more than offset the gains in exports. Because of the weaker dollar, American-made goods are more attractive abroad, and exports have been at record highs for the last 8 months. Imports and the trade deficit with China, however, were also at record highs. Later today, we get releases from the 3 Asian Pacific economies. New Zealand will reveal retail sales data along with activity in the manufacturing sector. Australia posts its employment report, and Japan releases industrial production numbers. Overnight, the Swiss National Bank is expected to hold rates steady at 2.75% in their meeting. Tomorrow morning, the U.S. will post retail sales and inflation felt by producers. Finally, Canada will show its quarterly labor productivity, orders for manufacturing, and a measure on housing prices. That's it for today. For CMSFX.com, I'm Mike Hetman. Thank you for watching, and join us again tomorrow.